What's going on, guys? I wanted to make this quick video about order blocks. This is going to be pretty much for beginners looking to start trading, or if you want to get a little bit more knowledge, this video should help you out. So let's get right into it. So what's an order block? Okay, let me draw my little drawing here. Order block is always going to happen after a break of structure. I'm not sure if you guys are familiar with the break of structure or what it is. But pretty much when you have a price action, let's say for example right here, price action is going up and then it dips down. This was the highest that it went. So this is going to be the high that, keep an eye on this, it has always to be a body candle close. So a body candle close above this high is always going to be a break of structure. And I'm going to also show you an example where it wouldn't be considered a break of high. But whenever you have a break of structure right here, the last bearish candle, in this case, because this is going to be a bullish scenario, the last bearish candle is going to be a order block. And then we can do, again, price broke this high. This is going to be a break of structure. So let's say price keeps going up. This will be your new high. Price dips down. This is still your high. Price eventually went up again. With the full body candle close, this will be considered a break of structure. Why? Because a body candle close closed above this high right here. Now, let's say after this break, price keeps going up, dips down again. This will be the high that it needs to break. But if you see right here, let's pretend this is going to be a wick. So this is going to be the high that it needs to break. But what did the price do? Yeah, it went above it, but it didn't close. It just left a wick. This is not a break of structure. Remember, a full body candle close has to happen in order to be considered a break of structure. A wick, it doesn't matter. Don't even pay attention to a wick. This is not the break of structure no more. But now that this wick happened, instead of this being the high, the new high that price needs to break is going to be right here. So don't even pay attention to this one no more. Now we got to pay attention to this. So that, you know, price is doing its thing. Let's say it's chopping people up. Gets near it. No. Okay. What happened here? This price action in here, you might be saying, hey, this high got broken though. Wouldn't this be considered a break of structure? No, that is not a break of structure because that's not the highest high. This was what I consider an internal high. So the actual high that needed a break was this previous high because this was just a wick. So let's say price actually broke, full body candle close above. This will be your new break of structure. Oh, my bad. And then your order block is going to be the last bearish candle. And we'll get to the live charts right now. That way I can show you an actual example and why it's important. But this high will be your break of structure. Not this one. This one, ignore it. That doesn't matter no more. This was a wick, is the highest high out of all these right here. So this has to break this one. These is just a bunch of noise. This is nothing, okay? So this will be your actual break structure. So this is going to be it pretty much for the bullish scenario. Again, I forgot to mark right here, but this is your break structure. The last bearish candle before the break is always going to be your order block. So this is going to be your bullish scenario. Okay. Let's get to the bearish scenario. Pretty much exactly the same thing. Guys, keep it simple. Don't overcomplicate it. We're going to get to the live charts too, so you can see examples of this. So pretty much bearish scenario is going to be exactly the same as the bullish. Obviously, it's going to be the opposite. So you're going to have a break here. Another break right here. And what's going to be left behind? In this case, since it's a down close, it's going to be a bearish scenario. Your last bullish candle before the break is going to be your order block. So in this scenario, it was the last bearish one because we were in a bullish trend. And this bearish trend is actually going to be your last bullish candle. That's going to be your order block. Again, another break happened there. It's going to be your order block. Also, a thing to keep in mind, there's always going to be liquidity right literally on that same candle where the order block formed. Let's say this is your bullish candle. At the highest point, in this case, is going to be the highest point of the bullish candle. That's going to be liquidity and an order block. So I'll get to that more in the next video, but I'll explain that a little bit on this video with the live charts, so that way you can understand what I mean by that. Let's keep going with this scenario though. So let's say price action again went up. What happened here? Again, this is gonna be a wick. Is this breaker structure right here? Is it? Oh, wait, what? There you go. Is this a breaker structure? If you said yes, you're wrong. Sorry to tell you, but what did I say about the bullish scenario? If price goes past it, yeah, but there's no body candle close below this low, it doesn't matter. Ignore it. This will be the new low that price has to break in order for this to be considered a breaker structure. So let's say now it actually happens. This will be a breaker structure, and then the last bullish candle before the break is gonna be whatever. Guys, it can be any size. It can be as small as this. This could be this. It just depends. Once we get to the live charts, we're gonna go ahead and see exactly what it'll look like with actual candles and not just a drawing. But yeah, if you guys have any questions about this, you can go ahead and leave a comment. I'm more than happy to help any of you. Again, if you want to take a screenshot of this is going to be a bullish scenario, and this case will be your bearish scenario right here. Okay, now time for the fun part. Let's get to the live charts. So we're gonna go pretty much, this is gonna be this week and last week. So what I see here, also a thing to remember, guys, the higher time frames, if you didn't already know this, higher time frames are always gonna hold more power than your lower time frame, whether it's a 5-minute order block. They still matter, but in this case, there's a 4-hour order block right here. This is gonna hold more power than a 5-minute one. What do I mean by that? So, or first of all, let me get, how did I get this right here? From here. This right here was a breaker structure. Let me move it to the side. This right here was a breaker structure. And guys, if you need help, like if you don't really see it, you're like, what the heck, what is he even talking about? Always use your path tool. Because pretty much all this is right here. This is what it is. So if it's easier for you to see it like that, go ahead and use the path tool. That way you can see it. But this is a breaker structure right here. Let me just make it a little bit bigger. Oh, that looks kind of weird, but you get what I mean. If it's easier for you to do it like that, definitely feel free to do it like that. It's a lot easier to see. So this is a breaker structure. This right here as well. Again, these are all bullish examples. And in this case, on this break up, what was the last bearish candle here? Move up, what was the last bearish candle before the break? Was it this one? No. Was it this one? Yes. Why? because before the break, this is bullish candle, bullish candle, bullish candle, bullish candle. This was the last bearish candle that happened. So we're gonna go ahead and mark that. Again, you may already start seeing a pattern. These are both 4-hour order blocks. What happens here when price taps it? Bounces, it goes up. And this is just one of them. Imagine this one. These two are overlapping a little bit. This is already an order block right here, and then there's one underneath. Goes down, taps it, bounce. Again, right here. Oh, I didn't mean to do that. Again, right here, taps. In this case, it taps both of them, bounce. The reason I was explaining that under each order block, there's liquidity. Now we're gonna see. I'm just gonna go into it a little bit. The next video is gonna be mainly focused on liquidity. But yeah, all you see right here, yeah, this is an order block, tap, bounce, tap, bounce. But always gotta look at the bigger picture. Yeah, it tapped on the order blocks, but ultimately it was getting this liquidity right here. This first tap bounced off the order block, came back down for liquidity. Guys, a 4-hour order block or 4-hour liquidity is gonna have a lot of power, a lot of impact, rather than a 5-minute, 10-minute, 30-minute, 1 hour, put it how you want, a 4-hour liquidity grab. What did it do right here? It literally grabbed liquidity and bounced up. Look at this big ass move just because of the liquidity grab. Again, this scenario, what happened here? This was an order block, but what did it also do? Guys, even if it taps it just a little bit, like look at how minuscule, or not, it's not really big, it's not really small. Once you zoom in, you can see it, but it literally grabbed it and just fucking skyrocketed up. Look at this. Grabbed it, bounced up. Keep in mind, this is not all in one day. This is from what, Thursday? This is like a three-day move. But ultimately, you always want to look at the bigger picture at your higher time frames, because the higher time frames are going to tell the story. We're just going to be identifying order blocks here. So what happened here? Another order block. Why? I'll tell you why. This is a breaker structure right here. If you want to see it better, why is this a breaker structure? Because this was the high that price made before it went down, and this was the high that it needed to break. What happened here? This big candle, big bullish candle, broke that previous high, thus making this the order block. Some people say when you're marking order blocks, I mean, it kind of just depends how you want to do it. I personally like marking the wicks as well. I know some people just do the bodies, but the reason why I like doing the whole candle with the wick included is because I like to mark my liquidity. Liquidity is here. What happened again, guys? After this video, I kid you not, you're gonna start seeing this a lot more. Every order block underneath has liquidity. What happened here? Swept it, swept liquidity, bounce up. This I don't personally count liquidity twice. In this scenario, it worked, but don't count on it. I feel like this, in my opinion, this was just an order block bounce. But grabbing liquidity twice, it would have had to break this right here, or not break, but it would have had to go below this to grab more liquidity. Not necessarily this one again. So this is just a bounce from the order block. It's really important also, especially for higher time frames, always look at the bigger picture, you know, because this, let's say we were just looking at this, right? Because I know there's some people like this. They're like, oh, bounced up, okay, candle, okay, went up, breaker structure, whatever, but they don't actually know why. For example, right here, why did it go up? Okay, there's some people that just look at the charts and are like, oh, just looking at what's going on in this day, because each candle is 4 hours, guys. Just these 4 candles right here just these 4 candles is one day. This is on multiple days that happened, that have gone by. And you always gotta look to your left. Always look to your left to see what's going on. Right here, what happened here? Liquidity grab. What happened here again? Break of structure, order block, liquidity grab. This is the reason why it bounced up. Right here, why did it bounce up? Liquidity grab and then a big move up. You're just starting to trade and you're on the right side of the market. You're gonna make money. I don't want to say guaranteed, but you're gonna make money because you're on the right side of the market. If we're bullish on a day and you're placing bullish trades, you're gonna make money. So this is definitely a learning process. I'm not gonna tell you that you're gonna learn trade you're not gonna learn how to trade in 2 weeks, 3 weeks. No, guys, you're in this for the long run. It's gonna take months, years to become profitable. Some people have had luck and they get profitable within months, and you know why? That's because they put in the work and they actually took the time to study this, because once you study it, once you see it, you can't unsee it. Like I could have seen all this without marking it. I was just marking it for you guys so you can see why the market moves, why these big moves are happening, because this is not happening for no reason. There's a reason for these moves right here. Once you have it all marked up, you can see why. You can see what's happening, and you're like, oh, okay, that makes sense. Why did we have this big move from here? Just because? No, it's because we had grabbed liquidity, and liquidity used that, and the market used that liquidity to have this big move up. Same thing happened here. I know I already went over this multiple times, but I really want to get this engraved into your head. Always be on the lookout for liquidity and order blocks. Mostly, me personally, I like to mostly look for liquidity, because again, liquidity moves the market. Okay. If you guys have any questions, you can leave a comment. I'm always here to answer. I'm not selling no course. I don't do none of that. This is all free for you guys. Okay. Yeah, if you guys have any questions, leave a comment. You need help, I'm more than happy to help you guys, because I wish someone was there for me when I was learning all this. Fortunately, I didn't have nobody to teach me this, but now I want to teach you guys. Yeah, if you have any questions, let me know. If not, I'll catch you guys in the next video.